Hi, and welcome back to the show. We're speaking today with Sheldon Wolf. He is the president of Regina Credit Fix and is one of Canada's top forensic credit experts. He is a specialist and an educator to Canadians on topics such as credit restoration, credit score modification, debt settlement, and identity theft protection. Sheldon brings to the table over 25 years of credit experience and currently sits on the board of directors for the Credit Institute of Canada. Today we're going to discuss foreclosure mitigation. It's always a pleasure having you on our program, and today's topic is one we hear so much about in this torrid economic times, and yet I have no idea that there were programs out there being offered like yours. These days we all know someone that has faced a foreclosure repossession. Sheldon, thanks for joining us.
You're very welcome, Fran. I appreciate being here.
So how does Regina Credit Fix help people in cases of foreclosure, Sheldon?
Well, we kept encountering Canadians coming to us all the time with debt problems, and where there was smoke, there was fire. So not only did they have debt problems, but they weren't paying their mortgage, and the average Canadian would get a statement of claim and simply have no idea how to handle it or what to do with it. So they'd be like a deer in the headlights, and it's a procedure and a process, and if you don't know what you're doing, you're going to be served up to the avails of scrupulous lawyers and banks who do know what they're doing. So we developed a great program to help Canadians.
Well, I've never heard of foreclosure mitigation. Are there lots of companies doing this out there?
In the United States, there's a ton of companies doing it. In Canada, there's virtually none. And unfortunately, your options are you can pay expensive lawyers $300, $400, $500, $600 an hour to deal with your foreclosure, or do it yourself, and like most people end up with no home in the end. So
that's a horrible scenario. What are the typical solutions that can be negotiated for your clients in foreclosure? It seems like there are only two options, aren't there?
Well, it really does come down to two options. There's lots of sub-options and other ways to handle it. But really, at the end of the day, I call it this way. You're going to either stay or you're going to go. So customers contact us and say, look, I really can't afford to be here. I need to come up with an exit strategy. And the other type of consumer comes to us and says, you know what, I can. I'm down on my luck. This happened. I was in the hospital. I'm back at work now. I just need time to get this caught up, or I need terms to get this caught up and move this forward. So it's the good old, we're going to stay or we're going to go. It's really comes down to those two options and different variations of them, but that's pretty much what it is.
Well, what can you do if your client ends up with a judgment when all is said and done?
Well, that's the leaving part of it, where someone can't afford to be in the property and they have to turn back the keys to the property, to the bank, and they do end up in foreclosure, which is unfortunate, but it happens quite frequently in this country, where people end up in these fiscal messes. Sometimes health causes them, sometimes just turns of events in their life. But it's important that even if you are going to walk from your house and walk and have a foreclosure on your hands, it's still very important to mitigate the damages, because you could possibly end up with a big, giant, mega judgment, and that will haunt you for a long time if it's not dealt with properly. So it's not as simple as just dropping keys off on the bank's desk and walking away. There's a lot more that has to be done. So.
And who is usually owed the money when the home goes into foreclosure? Well,
there's a system set up depending whether your mortgage was a high ratio, whether it was an assured mortgage. So if Genworth or CMHC were involved with your lender, they may have insured the mortgage and guaranteed to pay back the bank for the losses in the event that you went into foreclosure. So sometimes it will be CMHC, GE, and sometimes it will actually be the lender itself, depending on what kind of mortgage you signed up for.
So how can you settle these deficiency judgments? How is that possible?
Well, it's like that's where we jump our hats, and it becomes a debt settlement matter. And CMHC, the lender, Genworth, they're all more than welcoming on looking at what you can pay versus not being paid at all. So we can do, once again, lump sum settlements. We can do payment plans, all different ways to deal with it. Not dealing with it at all, they're going to come after you and they're going to try and settle it their way, which is usually the opposite of what your way is. So give us a call. Let us look at your situation. You'd be amazed at what kind of deals we can put together. Keep the wolf off your doorstep, so to speak.
and introduce the wolf. So
exactly.
now, but Sheldon, is it easier to negotiate with the bank, CMHC, or Genworth?
They all want their money. I've been doing this too long to say that there's no there's no teeth involved with banks and CMHC and Genworth, but they want their money and they want to get it however they have to get it. Unfortunately, the average Canadian consumer is literally a deer in the headlights as far as these guys are concerned. So our programs are great. We've had a huge success rate settling these things and having things settled in favor of the consumer. So which is a nice change.
Would you say that most Canadians want to keep their homes? In your situations?
When we do foreclosure mitigation, I will tell you that probably 85% of the people we deal with want to stay in their homes. They just need terms to get back on their feet, and I like to say that it's always their fault, but we encounter a lot of mortgage companies, and a lot of times the lawyers and the banks are working against the consumer, and that's really sad when a guy can keep his house and wants to keep his house and is prepared to do almost anything to keep his house, and they get bricks dropped on them instead. That's really sad.
Well, and that reminds me of an article you wrote last year in regards to mortgage companies manufacturing foreclosure. Are you actually saying that mortgage lenders cause their own foreclosures?
I will tell you that in a lot of cases, in cases I've personally reviewed where the foreclosure was caused by the bank, where the consumer was more than able and capable and willing to rectify things and to settle things and to satisfy things, and between the bank and their lawyers, they made it virtually impossible for the guy to land on his feet, and that's because in a lot of cases these insured mortgages are guaranteed. The bank is guaranteed their money back. CMHC ends up taking it on the chin, but the bank gets their money, and the poor consumer ends up with a big judgment. And none of this needs to happen in probably, I'm going to say, 70% of the cases I encounter. And our customers are calling us desperate, saying, we have the money, we're not getting it till this date, and the lawyers keep racking up a bill, and it becomes a bridge too far. No matter how close they get, it seems like it's pulled just inches away further from where the customer just simply gets to the point where they have no choice but to end up in foreclosure. And all this could have been avoided.
Well, I'm not at all by any means a professional in this industry, but I can only assume that if they're pushing to have the house repossessed, they are essentially creating the judgment to be larger. Tell me about the appraisal process and why a Canadian consumer would want to have your company deal with foreclosure matters.
Well, one of the wonderful things I get to look at is the appraisal process when a house goes into foreclosure, and they use what I call fire sale methods and tactics. So the lawyer will want to show that this bank, who's their client, is at some risk. And let's face it, a lot of cases they use the same appraisers over and over and over. It's the old buddy system. So they get these appraisals, which are clearly lower than market value, substantially lower in many cases, and they want to create a bigger judgment in a lot of cases, and they want to get the guy out of the house faster. So they want to be able to take this appraisal, turn it into an affidavit of value, demonstrate in court how much of a risk, because of the low value and the lack of equity, that this needs to be foreclosed on immediately. And I'll tell you, in a lot of cases, one thing I know is real estate. I know financing. I know the appraisal industry exceptionally well. I'll tell you, I see more what I'm going to call bogus appraisals crossing the desk than you can even imagine, where they're grossly off. Not even close, but grossly off. And it's just a ploy to get people out of the house faster. And it's sad. It's sad that Canadians are being treated this way. So,
Well, before we go, Sheldon, what advice can you give Canadians when they get a statement of claim?
Don't do nothing. Canadians, do nothing. Do not do nothing. Call us. Let us look at the situation. You'd be surprised what kind of suggestions we have for you, how easy it is to settle a lot of these things. Most banks get the homes back, including your equity, simply because the consumer did nothing. They let it lapse. They didn't show up in court. They didn't do a statement of defense. And you don't even have to do that in a lot of cases. A lot of times they want communication. They want to have some kind of game plan, a mitigation plan. And if the bank's not being susceptible, a lot of times we can go directly through CMHC or Genworth and bypass an uncooperative lender. Which, of course, if they're going to try and get a judgment after against you, it should be noted on file that you did make efforts and there was a standing offer by you and it was ignored or wasn't handled properly. And that can be used great when it comes to settling the judgment in the end. So lots of factors like that play into it, and it's good to have someone on your side, and we're on your side.
Well, thanks for doing this interview once again with us. It's always great to have you, and we are enlightened by your knowledge on topics of credit, debt, and foreclosure. And we look forward to seeing you again. If you're looking to contact Canada Credit Fix, you can go to their website at canadacreditfix.com or call them toll-free at 1-866-530-3646. Sheldon, thanks for joining us.
Thank you.
And thank you all, and see you again real soon.